Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, March 10th, 2010. First, we'll take a look at the euro-dollar pair, with the euro shaking off lingering concerns over Greece sovereign debt on Wednesday, and it gained as we had some risk appetite in the markets on the back of some strong Chinese economic data and a successful Portuguese bond sale, which helped to stoke investor appetite for riskier assets such as the euro. We tested our support around 1.3550 and just at the start of the European session, which has been our support throughout the last 3-4 sessions, and we did bounce up off that, testing the 1.3680 level, around the 1.3680 level as our high for today. So we are within this, staying within this range here, opposed to the wider range we've been experiencing throughout the middle part of February till now. Portugal sold more than it had planned of a long-dated government bond, with the Portugal's Treasury and Government Debt Agency reporting a sale of more than planned 990 million euros when they had been planning to sell only 750 million euros. So that means that investor appetite for those bonds was high, which helped to reduce some of the risk and uncertainty regarding sovereign debt. We also had equities in Europe climb during the second half of the European session, which corresponded with the beginning of New York trading, which boosted us past the 136 level here in the second half of this rally. With China overnight reporting a steep increase in exports, looking at the Australian dollar pair, we see that news helped the Aussie to break above the 0.9150 level, which was our resistance in yesterday's session. Our high in yesterday's session, and following a break and test of 0.9190 level, we retested this previous level that was resistance as support. That was the highest this pair has been, the Aussie dollar pair, in 7 weeks. And we seem to be extending this rally that had started in late February. And as we can tell, our top visual resistance in this pair now is around the 0.9325 area. So that was our high in January for 2010. The sense of risk appetite in the markets weakened the yen. Here we're looking at the dollar-yen pair, and we see that not only did the dollar make up its losses from yesterday's session, but it managed to reach a new high just at the 90.80 level. That brings us back to the level we had been after the boost to the greenback following a stronger than expected non-farm payroll report in last Friday's session. Again, we had a rally in risk appetite as Chinese exports in February rose 45.7 from a year earlier, which was a pickup from January's 21% climb. The data helped to further the theme that the global economic recovery is on pace, and that helped investors to move away from safe haven yen and towards higher yielding currencies. If we take a look at the Aussie yen, we see that we broke above this 82.50 level in today's trading, rising up to 83.31. That pushed us above this high we had seen on February 21st, and we had dropped down since then, mainly on risk investor sentiment turning sour as a result of Greece, but we have managed to pair these losses from late February, and now we're even pushing to new multi-month highs. Zooming this pair out even further, we see that and plotting a Fibonacci levels, we see that we've pushed above 61.8%, which was that resistance we had mentioned, and now we may be moving towards the 78.6 area, which is around the 84 range. While we had better than expected data from China, we saw a weak industrial production release from the UK, which weakened the pound in overnight trading, making us hit a new low for this week around 1.4870. We did manage to recover most of those losses as we had risk appetite in later European trading and New York trading, but we stalled at our moving average, 50-period moving average, which corresponded with the 1.4975 level. Today's low corresponded with a 78.6% retracement of the steep fall we had seen on February 28th and March 1st. The pound, which has lost more than 7% against the dollar in 2010, had already been under pressure in yesterday's session, as we had Fitch Ratings say that the sharp deterioration in the UK's credit profile during the global financial crisis has been within the tolerances of AAA rated countries, but that the government's current plan to cut the deficit by half over 4 years was way too slow. Fitch also said that cloudy outlook from the UK economy was a concern. So those downbeat comments from the credit rating agency has been pressuring the pound today, yesterday's session, and now weak fundamentals extended that decline in today's trading. Taking a look at that fundamental report closely, we see that industrial production for the month of January was down 0.4% when expectations had it rising 0.2%, and manufacturing production was down 0.9%, wiping away the 0.9% gain we had seen in December. Again, that figure was much lower than forecast. We did see the annual pace of manufacturing production climb into positive territory. That was the first increase in manufacturing output year over year since March 2008. Jumping back to the euro-dollar pair, overall today we did see risk appetite. We had higher yielders gaining against the yen and greenback, though the pound was pressured due to poor fundamental data. Tonight, Australia posts two releases, a measure of inflation expectations as well as the monthly employment change and unemployment rate for the month of February. The unemployment figures have been coming in very strong for Australia, and that has been one of the reasons that the Reserve Bank of Australia has moved to further tighten rates. Tomorrow at 8 a.m., the Swiss National Bank will decide on interest rates, though it is expected to hold rates steady at 0.25%. It will be interesting to see what the SNB says regarding the euro Swiss franc, as we have seen direct market intervention from the central bank within the past year. Also tomorrow at 8:30 a.m. in North America, we're going to get U.S. jobless claims as well as the U.S. trade balance and the trade balance from Canada, as well as housing prices index from Canada. So look forward to those releases. And that will do it for today's broadcast. For more news, videos, and analysis, please visit our site fxtimes.com. I want to thank you for watching and wish you good trading.